Hi friends, welcome back to the channel. So today I am taking a different topic. We are going to talk about tax loss and tax gain harvesting, right? So we are nearing the end of the financial year now. It's only 4 5 months that is left in the financial year. So I thought it would be prudent for you to understand why tax losses and tax gain harvesting is important. Basically, see, we are all of us are young. Whoever is watching the video, most of us are young, right? And we are going to continue to invest in the stock markets for a very long time, and it is very important for us to maximize our returns by ensuring that the returns after taxes are high, right? How do you do that? By paying less taxes. And there are legal ways wherein you can manage your tax flows better. So there is one concept called tax loss harvesting and another concept called tax gain harvesting. So we are going to discuss both today, right? I'm going to run you through a slide and also help you with examples to understand this better. But if you, during the presentation, if you have any questions, why don't you just comment and ask me, and I will clarify all your doubts, right? But it is very important, right? If you can grasp this, and you will be able to save a lot of taxes this today, and as your net worth increases, even then, right, it will be more important that time. So you listen and watch this listen to this video and watch this video till the end very. Like I said, we will discuss tax loss and tax gain harvesting here. Okay. So basically, before we discuss that, let me explain you what exactly is this. So if you are a buyer of securities in the stock markets, right, or if you have bought equity mutual funds, you have to pay taxes on the profits that you make, right? So there is a short-term capital gains tax and there is a long-term capital gains tax. Short-term is taxed at 15% for whatever securities you sell within 1 year. This is only equity securities, equity stocks, and MF. Only equity oriented stuff, right? And long term is 10% capital gains tax is that you have to pay if you hold and sell for after more than 1 year. Okay. In long term, you also have a tax advantage wherein if the total gain is more than 1 lakh, it is completely offset, and over and above 1 lakh is only taxable, right? So let us now understand what exactly is short-term tax loss harvesting. Okay. Before that, first let us understand what are the advantage of doing these activities. So it will help you defer your tax outflows, right? So you can defer it for a very long time because you can carry forward your tax losses for 8 years, right? That I'm going to tell you later. You can carry forward for 8 years. You can keep creating new losses every year, okay? Because equity markets are volatile in nature and it will give you lots of opportunities to create losses. Maximize your after-tax returns, okay? Maximize your after-tax returns because if you made, say for example, if you made say for example, if you made a 20% return in a year in short-term capital gain and you paid 15% tax on that, then your net return is only 17%, right? So if you're able to not pay this tax, then your net return will be higher at 20%. So you have to optimize for that. And also this will help you manage your cash flows better because of a simple reason that you'll have more money in your hand, right? So what exactly is tax loss harvesting? Again, it's very simple to understand. It is basically creating more losses in your books that you can offset against future capital gains. So 8 years, you can carry this forward for 8 years and you can offset it against future capital gains. I'll take an example and show you. But there are two types of losses, right? For any stock that you have held for more than 1 year, like I told you here, right? Short-term capital gain is for stocks less than 1 year. So similarly, short-term capital loss is also for stocks that are sold within 1 year, and long-term capital gain is for stocks that are held for more than 1 year. So similarly, long-term capital loss is also for stocks that are sold after holding for more than 1 year, right? So long-term capital losses can only be set off against long-term capital gains. So very important to understand here. Long-term capital losses can be set off against long-term capital gains only, and short-term capital losses can be set off against both short-term capital gains and long-term capital gains, right? So ideally, you would want to create more short-term capital gains in your books rather than long-term capital gains, because for simple reason that this can be set off against both. So this can be, since this can be set off against both, then you should definitely focus on this more than this. Obviously, if this also gives you an opportunity, please do not hesitate to do it. Like for example, I got a big opportunity in FY 20 in the COVID time when markets fell. So I booked huge losses. I booked huge losses and reinvested the entire money. So now let us take an example and understand. Okay. So for example, in FY 22, you had a short-term capital loss of 1 lakh rupees, okay? And in FY23, we'll take two scenarios here. We'll take scenario A and we'll take scenario B. In scenario B, in FY23, you did not book any short-term capital loss, so you had zero loss, okay? In FY23, you made short-term capital gains of 2 lakhs, okay? And in both the scenarios, you made short-term capital gains of 2 lakhs. So now what is the tax liability that you have? In this case, your taxable capital gains will be 1 lakh rupees, and in this case, your taxable capital gains will be 2 lakh rupees, okay? Now, if your tax rate is 15%, so you are paying 15,000 here, okay? And in this case, you are paying 30,000, right? So you're paying higher here, right? So ideally, you would want to avoid it. So that's why, focus on doing this. If you have any questions, why don't you comment and ask me? Let us also understand one example of long-term capital gains. Okay, so long-term capital gain, say for example, in FY22, in scenario A and in scenario B. Okay, FY22. Okay, so you had you booked a long-term capital loss of 1 lakh. Okay, 1 lakh, 1 lakh ka loss, and in the scenario B, you did not book anything. And keep losing this cursor. Sorry. Yeah. So in scenario B, you did not book anything. In FY23, you had a capital gain of total 3 lakhs here. Okay. And 3 lakhs in this case also. In scenario B also 3 lakhs. So your net gain in FY23 is 2 lakhs. And in scenario B, it is 3 lakhs. Okay. So now you also get a 1 lakh exemption. So you reduce that 1 lakh here. Net taxable capital gain is 1 lakh. In this case, you reduce your net taxable capital gain is 2 lakh. So at 10%, you will be paying 10,000 here and you'll be paying 20,000 here. And if you are in higher tax bracket, you may also end up paying surcharges, right? So it's very important to do this. So like I told you, both long-term and short-term capital losses can be carried forward for 8 years. So FY22, if you booked some loss of say 1 lakh rupees, okay, and you did not have any loss in FY23, 4, 5, 6, 7, 8, 1, 2, 3, 4, 5, 6, 9, and 2030. So in 2030, if you booked some gains, you can use this FY losses that you booked in FY22, right? The one that you booked in FY22 in 2030, and you can set it off against your capital gains. It's very important to understand this. Now, let us understand what is capital tax gain harvesting. So gain harvesting, so in 2018, I think, in 2018, long-term capital gains taxation was introduced. Okay, before that, it was tax-free. So a long-term capital gains was 10%, right? Like I told you, for equity securities only. Always remember, we are only talking about equity securities today. Okay, so it gets taxable at long-term capital gains are taxable. Sorry, it's not taxable. It's taxable. I made a mistake here. It is the taxable at 10% for listed securities. There is an exemption of 1 lakh rupees. Okay, so what you can do is, say for example, you don't have any capital losses and you just have gains. Then what you can do is every year you have to book a gain of 1 lakh rupees and take that and set it off against the exemption that we mentioned, like this exemption of 1 lakh rupees, right? So what's going to happen is this will increase your cost and thereby it will help you save your future future taxes, right? So let us take an example. FY22, you have a total investment of 5 lakh rupees, okay, and the profit on this is 1 lakh, and the total gain is 6 lakh. Total amount is 6 lakh. So what you do is sell equal amount, sell the number of units that is equivalent to 1 lakh rupees profit, and take the entire 1 lakh. So basically, you'll have to sell the entire 6 lakhs worth of units to book 1 lakh rupees worth of profits, and then buy it again. Okay. So what's going to happen is now your cost will go up to. So now your cost in so now your cost will be not 5 lakh rupees, it will be 6 lakh rupees, right? So next time, say for example, now this goes up to 8 lakhs, okay, and then you sell it, then your taxable amount will be 2 lakhs only and not 3 lakhs, right? So that's why in every year, 23, 24, 25, 26, 27, keep, increasing your capital, the cost of your investment by 1 lakh by booking capital gains and reinvesting the proceeds. So this will help you, say in 20 years, in 20 years, sold 20 lakh rupees worth of investment and booked it and, reinvested and increase your cost by 20 lakhs. So it will save you dramatic 2 lakh rupees in the long term, right? So it's a very good, obviously these numbers are very simple. They don't look so simple. It will be different when you do the investment. So, but beware of this, at the end of the, beware of this. So this is the way, these two concepts are very good to understand, right? If you have any questions, don't hesitate to ask me. Uh, if you have not done it so far, and if you think that if you have any stocks or mutual funds that you would like to hold, ideally, you should try the tax loss and tax gain harvesting, right? It's a very good process to increase your taxes. It is allowed legally. Okay, even the taxman knows that this is allowed and people do it. Okay, so there is no nobody will come and catch you for this, right? So if you have any questions, please feel free to comment and ask. So, and also do not forget to subscribe, like, and hit the notification button. Thank you so much.